Welcome to the PIWORLD interview recorded on Monday, the 27th of September. And I'm your host, Tamsin Freeman. And today I'm delighted to be joined by Iain Staples, Fund Manager on the UK desk at Schroders. Iain, thank you so much for joining us.
Hi, pleasure to be here. Thank you.
Can you tell us a bit about your background?
Yeah, sure. I always liked sciences at school and always asking questions. So I did the maths and physics at Cambridge and then Manchester, and I didn't really know what to do. So a friend suggested try corporate strategy consultancy because that would give me a wide variety of exposure to different industries, and also perhaps get rid of the green crest growing out of the back of my ears when I was about 21 or 22. So I did my apprenticeship, if you like, at LEK back in 1995. And I got fed up of working 24 hours a day, so I thought I'd go into broking and just do 12 to 18 hours a day. That was just before the start of the dot-com bubble started to expand. I joined Hall Gavett in its TMT equity analyst department. And 2 years later, once the bubble had duly popped, I emerged a much wiser and much more sceptical analyst than I had when I was going in. And then I did 10 years on the sell side, but it was that variety that I learned at LEK that eventually I ended up as a roving analyst at Altium, covering pretty much whatever I could make my clients money in 2010, 2011. And then Schroders said, we like what you do and come and do it for us. And so I joined there in 2012 and I took on my first fund in 2015.
Brilliant. And how many is on the team that you work with at Schroders, and how do you break up the different bits that you all do?
Well, basically, there's I have a remit to look at anything that's not in the FTSE 100, and I work with a fellow colleague and a star of PIWORLD, Andy Bruff, who leads the team, and he looks at pretty much anything apart from the FTSE 100 too. None of us is allowed to have a specialism, but it's a running joke on the team that, given my fashion sense, I should never ever make a call on a retail stock. So that's quite reasonable. But it does mean I get all the software and all the tech and all the fun, innovative stuff, funky engineering, funky technology to look at and interrogate those management teams. But I have tried to be interested in Frasers and Dunelm and Ted Baker, but just those clothes don't fit me.
But you have got a background in science, so I guess that helps.
Yes, very much. Yeah, it sometimes doesn't feel like work at all. I can just let my curiosity run wild, and then I have to remember I'm here to make money, not to expand my brain. But you do get sometimes an awful lot more to have a management team when you say, I'm going to spend my lunchtime trying to figure out how this bit of kit works. You can see the whole relationship changes. So often you get a little bit more out of them.
So what particular sectors and themes do you like at the moment?
I think it's not so much the sectors. I think it's more themes. I think there is such a huge rate of change and rates of innovation that virtually all industries are getting disturbed, whether it's the urge to help cut down on carbon emissions in manufacturing or in aerospace, or whether it's making, say, a frictionless journey for an SME to make an application for a small business loan. The rate of change in the provision of those sorts of services is absolutely huge. So I think it's sort of, the revolution that Bill Gates and Steve Jobs kicked off, and I can't remember the name of the Intel man, but he certainly plays an important part in that. It just seems to have snowballed now into such a rate of effect that if you have a good idea, you can't quite do it from your bedroom anymore, but certainly if you have a little bit of backing and a good idea, then you can make an awful lot of money. And really, in the UK, we do ourselves down. We might not be able to run an HGV fleet, so everyone runs out of petrol. But by Jove, if you want funky ideas or great engineering, we're amongst the best in the world.
Absolutely. So when you're looking at companies in those sectors or companies more broadly, what criteria are you looking for? How do you select companies that you think make good investments?
Well, I think there's two things. There's first of all, because of my .com experience, I don't like brackets around PBT numbers, and I hate brackets around operating cash flow. So that's sort of the qualitative side. I think the more difficult thing, more challenging thing I find in looking at companies is to understand that are they any good at what they do? And I think what my sort of preferred way of looking is always to do it from a bottom-up approach. So I'll start looking at a company along 4 axes. So brand and reputation. I'm going to show my age now. I'm sure you don't remember Sony Walkman, but do you remember the cassette tape players? The Sony,
I'm afraid
the Sony
I do.
Walkman? You're afraid you do? Okay. But you always paid another 20, 30 quid for the Sony Walkman, didn't you? You could pay for a Matsui tape player, which was just as good, but they couldn't charge the same as a Sony. So I think that kind of pricing power, brand and reputation is extremely important. Another example, Bang & Olufsen hi-fis, or headphones. 300, 400 quid for a B&O headphone, but you can get one that works perfectly well for half that price. So I think, what sort of brand, what sort of reputation does a company have, and can it charge a premium for an equivalent service a competitor supplies? Second one is called architecture, and this one is a bit more complicated. I think of architecture as a sort of a set of relationships that a company has, both with its customers. You don't want to annoy them because that's bad for business. You want to look after your suppliers, have very good working relationships with suppliers. We can see what happens with supply chains when that sort of communication breaks down. And also, is it the sort of business that can deal with challenges? So what is the internal architecture of the company like? Can it deal with stresses and strains? And one of the best tests we've all been through is the past 18 months. Some companies have come through COVID with flying colours. The share prices might have been absolutely not knocked to smithereens, but actually the company said, well, we've got no debt on our balance sheet, we've got net cash, we're still talking to our customers, and we're looking after all our people. And that's a good, strong internal structure that can be able to withstand some shocks. And then other companies saying, well, can we have some money because we don't know how we're going to cope, the future's unknowable. And you just think, well, do you have an good internal structure to deal with the shocks? And I think, we saw a company this morning, Funding Circle, set up to fund, to provide loans for SMEs. And people always said, you've never been through a sort of a credit crunch, a recession. As soon as that comes, you'll be taken outside and you'll be marmalised. Well, the CEO sat down in front of us this morning and said, well, we've just been through a really tough recession. It might not have been a consumer recession. There wasn't huge redundancy, certainly not in the UK, because of the furlough schemes. People remember what happened from the Wall Street crash back in 1929. But there was a huge recession in the SME world, and the companies come out of the test very, very well and very impressively. So it's those sorts of things that we're very keen. So often you can't do that in one meeting, and it's certainly been difficult in COVID, because sometimes the best way to find out about an internal structure of a firm or internal culture is to go and see it in its manufacturing site in Sussex or in Northampton, or where I come from, Cheshire. Go and see Mum and see the company as well. I'll see a couple of companies. But the thing is, when you walk in to a company, sometimes you meet everybody and everyone's part of the team. And that doesn't matter whether you're the receptionist or the caretaker or you're the group financial controller. Everyone's mucking in. But sometimes you go on these company site visits and all you see again is the chief executive and the finance director. And you think, well, I've seen you in London and we've all been in a suit and you presented well, but that's your job. So you get a feeling sometimes that, sort of the culture or the diversity, inclusiveness culture is sort of not really what it says. And then the third one is innovation. Can they actually make products that people want? Can they think about disrupting themselves? Far better to disrupt yourself out of a customer than be disrupted by someone else. So Hence, it lends very well to people like Oxford Instruments, Spectris, XP Power, a couple of the companies we might well talk about later, as well as being able to invent interesting good stuff. So, for example, we own shares in a company called BIG, which makes tags, and to help prevent recidivism in people who've been convicted of serious crime. But the best way to help people is not to put them back into prison. Let's say you got someone with a recovering alcoholic. Well, the pubs typically open, at 11 o'clock in the morning, and they close 11 o'clock at night. But this man, you still want him to be able to go shopping. You don't want him to go robbing. If you say to him, you have to stay within, say, Twickenham. You can't go 3 miles from Twickenham railway station, but you know where all the pubs are in Twickenham. This company has developed a piece of software that says, okay, you either wear the tag or you're back in prison, but you stay out of the pubs. And the thing is, because he's wearing a tag, if he goes in, shall we say, the dog and duck, the tag will say, and the law takes its toll, goes through its process. But being able to say to a Ministry of Justice, which this chief executive has, she said, look, I can actually help the prison overcrowding, and it only costs you this much for the tag. Whereas this is how much it costs to incarcerate a recovering alcoholic per week in prison. So it's those sorts of companies that we do meet. You just think, oh, this is very interesting. And then the fourth and final one is strategic assets. Before COVID, you would have said the BA landing slots at Heathrow were worth quite a lot. Now, I'm not sure they're quite the same value they once were. But also we used to have an investment in a company called Elementis, and that made natural pigments for use in ladies' cosmetics. Now, there's a great craze for natural only, so no chemicals. And they had the only mine in the world which had a white mineral and then could be used in makeup or cosmetics. And so they could charge a premium for that. And it's the only mine in the world, and they owned it. So it's those combination of those four things, the architecture, the innovation, strategic assets, and brand and reputation, that sort of certainly have given me over time a feeling for the shape of a company's defensive cordon or competitive moat. And very often they make very good investments.
And does the size of the company matter? When you're buying for the fund, is size, you're only looking at small caps. So how does that work? Or small caps and mid caps, sorry.
Yeah, small and mid caps. I think we don't go beneath 50 million because it's very difficult to get a sensible shareholding or find the shares typically in 50 million, but we're still quite careful between 50 and 100. I would say the sweet spot is anywhere between about 200 and 400. That's when the company is beginning to prove itself. It's got a good track record, and people can say, okay, it's been on the market 3 years, 4 years, hasn't really let people down, had a bit of a stumble maybe back in 2 years ago, but hey, that's all part of the growing process. And certainly typically very often, because we run quite a lot of small cap money, we can very often exploit our scale to say, okay, whilst there might be a large number of IPOs in the pipeline, and then you can't really do without Schroders, which is a great privilege.
Yeah, absolutely. So let's move on to the bit that people are waiting for, which is, what do you think represents good value at the moment for investors that fulfills those criteria?
Well, I think it really depends on I'd go back to those four themes. I think very often you'll see some share prices, certainly say within industrials or healthcare or consumer discretionary, which have run on too far. But if you scratch the surface a little bit more deeply, I still think that whilst you might not see value over a period of 1 month or 3 months, sort of the holding period of some of the stocks in our funds are anywhere between 3 and 5 years. So we take hence the importance of understanding this qualitative shape of the company and its boundaries. So we still like companies within say industrials. For example, there's a company called Eurocell. We own the shares, and we think we think the company will do well. They're exploiting the boom in house renovation and RMI. They make extrusions for PVC windows. So I think they're rather busy at the moment. Certainly in the UK. And also there's companies such as Strix, which make KETL adapters. It doesn't sound very interesting, but actually the engineering involved, because you remember you've got boiling hot water right next to 240 volts of electricity running at 13 amps, which is a bit of a challenge, because you've got this constant heating of the electric current. If any kind of water leaks or any kind of controls, then it's disaster, potentially lethal for the user. And what Strix have done over the past few years is not only say ours is the safest KETL control on the market, but it's also pointed out ones which are dangerous to the authorities. Now, most of these controls are made in China, and the Chinese have suddenly, well, quite a while ago now, realised that having, shall we say, dodgy controls going out onto the market is very, very bad for from a reputational perspective. So they actually use Strix. They say, thank you, Strix, for pointing out these dodgy ones, and close down the factories. Now, Strix makes a point of saying, okay, believe it or not, at the bottom of a KETL is about 120 different points of measurement that we ensure in the safety and construction of a KETL control. So next time, when you're having your cup of tea tomorrow morning, or perhaps, I don't know, you might have a cup of afternoon tea, just think on about all the clever engineering that's gone on. And it's run by an excellent management team based on the Isle of Man, manufacturing out in China. And they've been distributing to the OEMs for about, I don't know, I'll guess, but 10 or 15 years. And also, no one in the US has a KETL. So first of all, there's a scope for either moving them to KETLs, or the trend there is for the hot water taps, and Strix has got one of those as well as other products. So thankfully I'm long past it, but they've got a piece of kit for warming baby milk to body temperature. So my days of that are long gone, but it seems like a really good idea, rather than dipping your elbow in or whatever it is I was trained to do back then. Forgot that very quickly. But joking aside, sort of stressed out mum, exhausted dad, 3 a.m, bang, press a button, 30 seconds later out comes the milk. And I think it's just this kind of this incessant sort of innovation that I like with Strix. And also there's a company that we own called XP Power, which makes electrical controllers, or electrical converters rather. So that takes this nasty 240 volts, 13 amp electricity at your mains, and turns it into something usable that you can use in an electronic piece of equipment. So, for example, a very delicate piece of healthcare equipment. If you have a loved one or even yourself connected to one of those machines, you don't want it, first of all, the power going. You don't want it producing false results to give a false management of the patient. So, funnily enough, whilst it's straightforward if you study electrical engineering at uni to make it consistently and to pass all the healthcare regulations is very, very tough. And also they make electrical converters for use in rail. I mean, that's really very, very highly rated and dangerous electricity, and also for power converters in semiconductors. So again, it's this kind of constant innovation. I first came across the company back in 2010, and there was just this incessant drive to both increase the gross margin. It was always about 40-45%. It's got great pricing power, so that's the brand and reputation. You could go around and meet the company. Anyone who worked in the company could tell it was a great culture, but it was always driven towards innovation and solving things for the customer. And they clearly had a great reputation with those customers, because it kept growing. So always like that one.
Are you worried about them being able to get supplies with the chip shortages?
Well, I think that's very fair. I mean, these companies I'm talking about have been in their respective fields for 20-30 years. So when you sit down with not just the chief executive, but with the head of procurement or head of commercial or whatever organization, you're normally talking to quite a gnarled individual. let's just say they've got lines on their forehead, and if it's a gentleman, you probably have white hair. Can't possibly comment about if it's a lady, but certainly the experience is significant. Sort of, more seriously, what has happened in the past? These people have been through 2 or 3 cycles before, and once in electrical power converters, for example, there's a very trivial component which you could go onto Amazon and buy. Well, I used to be able to buy, say, 10 for a £5. It's called an electrolytic capacitor. It's a very simple component. But there was a downturn in early 2000s where there was not an electrolytic capacitor to be had. So stuff couldn't ship because it's absolutely key. But this piece of kit costs 50p. Now, when you've been through that once, or you were then perhaps a manager, one of whose responsibilities was capacitors, but then you never ever forget that, ever. So even if now 15, 20 years later, you're responsible, you'll always say, well, it's only 50p, so I'll carry an extra 2 weeks, 3 weeks of supplies of capacitors, because then I won't lose my job and I won't get any more grey hair if I'm a fella. So, it's just knowing that no nonsense kind of procurement and the reputation that these companies have means that both they can get hold of stuff, and also if there is any sort of the ability to pass on price increases exists because of their great reputation and brand.
And what about competitors?
Well, I think that is the sort of the flip side to architecture. I would argue that very often, a good management team says, okay, I have a great set of relationships with my customers, but I also have 2 guys looking at the competition. That's all they do in their life. So one of the best ways to understand your competition is to have a great relationship with your customer and say, okay, have you seen anything from XYZ PLC recently? That's a cup of coffee, or maybe even a glass of wine if it's allowed. I know people are a bit funny about that kind of thing these days, but just being able to say, right, okay, what's the gossip? What are you hearing? That's the key part, I think, of any commercial organisation.
And it's not particularly cheap. I mean, it's not stupid expensive, but I think it's on a PE of about 26. And the share price has been fairly static for the last year. What's going to be the catalyst for the share price to move?
I think the world coming out of its COVID stupor or torpor. I think people are concerned about the manufacturing slowdown, certainly in automotive. No one really knows what's going on in China. I'm reading publicly available reports that three provinces are in complete lockdown again in China. One just outside Hong Kong. So, but funnily enough, we're not hearing anything. We're rather distracted with our own sort of self-inflicted woes at the moment. So, I think there's just this inability to step back and think and look up and say, well, okay, where could this company be in 1 year time, 3 years time, given its proven excellence in its field. So with XP Power, I say, well, okay, it might well be bumbling along at a very nice rating, but I think it consistently has delivered time and again, either in going into associated or contiguous market areas, and really doing very well.
So where else do you think offers value for investors?
I think there's quite a lot of interest. I think in healthcare if you look carefully, and I would say certainly perhaps not value now, but in renewable energy. There's been debate. Well, there were 2 stories in the press over the weekend, wasn't there? There was the inevitable talk about fuel shortages, but also the fact it hasn't been very windy in the UK over the past month. So at least we're talking about the weather, which of course, being British, we love. So I think the fact that actually, because we've gone helter-skelter, rightly or wrongly, towards renewable energy, it's great when it works. But there is also the fact that we've now got only about, I don't know, please correct me if I'm wrong, but I was reading only about 2 or 3 days gas of supply. So if that runs out, and because we're depending on solar and wind, when it's sunny, even if we don't need it, we need to store it. So this has to be a store of energy. Now, there are various companies such as Ceres, there's AFC Energy, there's ITM on the hydrogen space, and there's various companies also doing energy storage, and they've got various government-backed projects. Whilst it's very difficult to value these companies, I think the technology is now proven beyond prototype, and it's now moving to manufacturing. So we own shares in Invinity, which does energy storage. So when it's sunny, even if that energy isn't required, it's gloriously sunny where I live at the moment. So solar panels do their thing. Electricity flows into the, it's not a battery, it's just I won't go into it. I could talk all afternoon about it, but a piece of energy storage that electricity stores, and then you draw it off when it's required. It's been tested at a super hub in Oxford. I think Oxford University are involved, and certainly, whilst it's difficult to value, I think over the next 3 to 5 years, as we become more aware of the problems associated with renewable energy, companies like that will be extremely popular. Now, of course, it's just not the UK that's going. California leads the world in setting legislation that everyone rolls their eyes and says, "Oh golly, they've been taken over by the flip-flop brigade." But then 18 months, 2 years later, actually, 6 out of 8 of those pieces of legislation was actually quite good. So we'll do our own version. But the thing is, with of course California, huge impetus to change the way power is stored, because the electricity lines are put up very cheaply. So when the wind blows or there's an accident, the lines collapse and cause the massive fires that we see. But of course, it's quite sunny in California. So they're trying to figure out a different way of saying, right, okay, when it is sunny, let's store this electricity. And Invinity is one of several companies that makes an energy storage solution that's been in the mix in California. So we've got the Oxford, we've got California. I think that certainly is an area that we keep a close eye on, shall we say. And also there's a great shift in artificial intelligence in healthcare.
Can we just back up on the Invinity and vanadium flow batteries? Now, you said that you liked companies that were cash flow positive and that were profitable, and so that one
isn't
doesn't at all. So how does that fit into your criteria?
Well, that certainly doesn't fit that criteria. So typically we say, right, okay, can we bear the pain if the company comes and asks us for money? Is the management team strong enough, and do we think it's the right person to back to get it through to break even? And sometimes we say yes and we get it right and we make an awful lot of money, and sometimes we get it wrong and we have to change the management, which we have done in companies in the past. And sometimes it's taken an extra year, 18 months for that value to be realized. What we have appreciated is that there is, you can only allow yourself, say, 1 or 2 of those in the portfolio. I'm certainly not saying I've got 50% of my portfolio on those sorts of bonds. So, it's no more than 2, or if it's more than 2% of the portfolio, I'd be amazed. But it's also having that constant discipline. Every time you meet the management, you're saying, well, am I being sold a line? Am I being sold a pig in a poke? And if I am, how do I fix it? I think with Invinity, certainly it came from a company called Red T, which had great engineering, but that was it, engineers. And they merged with an American company, and it's led. The new company is now led by the CEO from America. And to say that he has a very solid and hard commercial focus would be, I think, an understatement. So he's very aware that he can't keep coming back with a begging bowl. However, there are other ones where we've said, well, okay, you've got great technology, but I think the management board needs bolstering, and we put in a chairman or whatever, and he or she has certainly gone through the management very thoroughly, and stronger performance results. And again, it's the advantage of sort of the scale of Schroders. You can say, look, we're not happy, we own 10%. Things need to change, and very often they do. So no, you're quite right to point out the brackets.
And with Invinity, are you bothered about when they get to profit, or are you more interested in them investing for the future?
Well, I think it's always a trade-off, isn't it? I think they do need to invest for the future. They've made it very clear they're beyond the prototype stage. They have been, I think, publicly in the public domain said we're going to have to probably work quite hard and to make sure we use all our resources properly, existing resources properly, which is fair enough. I think they can get to an interesting point, but sometimes if it just needs a little bit more of a push, then okay, well, we'll see as and when what is said.
So you haven't got a timeline as to when you're expecting profit?
No.
Okay.
No, I don't think they've given one, funnily enough.
And that's not a criteria of your.
Well, no, it's sort of if it's constantly kicking the can down the road, and it's another 12 months away, it's another 12 months away, then of course comes a point when patience runs out. There's quite a famous, quite a well-known company floating at the moment. Prospectus is out, so numbers are in the public domain. It's turned over 60-70 million a year, but it's had a loss of 100 million a year, and it's sort of valued in the mid 250. And I'm sort of scratching my head, saying, okay, who keeps pouring the money in?
Can you say who it is?
Yeah, it's Oxford Nanopore.
Yes.
So I'm a bit perplexed. I love the science, even though I didn't do biology at school. But I think, wow, golly. So that's the sort of thing I would veer away from. But I suppose I'd say, okay, when are you going to get rid of those brackets around the PBT, because you've been trying for 5 years and it hasn't really happened yet? Whereas Invinity, you could argue the risk is much higher, because you say, okay, you're making something that people don't really understand as yet, which you're doing. You can tell yourself, well, I'm doing a good for society, but okay, let's make sure I don't take on too much risk with people's capital.
So moving on to Meditech, which you started to talk about, what companies or company do you like in that sector?
There's quite a few. There's sort of some great innovative British companies, or companies that have come out of universities either in the UK or in the US, with some very interesting technology. So we have a small investment in a company called Renalytix, which uses AI and big data to try and classify people who are at threat of falling ill from chronic kidney disease, because it's associated with obesity and poor diet. There are certain segments of society where chronic kidney disease is particularly prevalent, and not only that, very often the first time that the patient finds out that he's actually got CKD or chronic kidney disease is when he passes out after his burger and cola in McDonald's, wakes up in A&E or the emergency room in the US, and the doctors tell him his kidneys have failed and he's going to spend the rest of his life on dialysis because he's in stage 4. And if he doesn't have dialysis, he will die, which is horrible. So it's about finding these patients long before they collapse and wake up in the in A&E, and then try and help them. Say, look, carry on this path. This is what will happen. You need to change how you live, and you need, unfortunately, to cut out the burgers and the donuts, shall we say? And it's because it actually came out of the US. When the company was first formed, it was too small to be of interest to people on NASDAQ, so it came to the UK and floated on AIM. And there's a very well-known research institute, stroke hospital, on the edge of New York City called Mount Sinai. And the phrenology department there was led by a woman called, I can't remember her surname, but it was Barbara. Very sadly, she died from brain cancer recently. But she led the effort and got a very good manager in to lead the development of the software and also the reimbursement code to make it available in Medicare and Medicaid in the US. And such was the huge cost in the US of looking after people with stage 4 chronic kidney disease. One of the few good things you could argue Donald Trump did, he said he actually made it a national strategic priority to get these people identified and get them on the road to fixing themselves. So the share price floated at £1, and it did very nicely, and it went up to 11. I think it's come down to about 7 or 8 now, but still sitting on a very tidy return. Again, no top line. It's got brackets around the profit. But in terms of delivery, in terms of sort of targets being set and those targets being left shifted, i.e. they were hit sooner than I was expecting, it's been a consistent outperformer. And really the execution skills of the top management team have been absolutely first class. And then they floated on NASDAQ once they got to 8 times their original size, floated on NASDAQ, raised some more money, and are doing very nicely. The share price has fallen back a bit because people are getting a bit tetchy about bond yields, but in terms of the technology, what the company's doing, it's going gangbusters.
And does it rely on any regulation?
Well, no, it's that coding, the Medicare. So the regulation is around the protection of anonymized data. And funnily enough, I think that you can imagine that was one of the first things the company made sure about in terms of crunching the data. And also they've got sort of an academic board full of key opinion leaders around the US. So it's the great of the good from MIT, Harvard, and all the other Ivy League names that, because I'm doing a broadcast, my brain's gone blank.
But it did drop back at the beginning of September, and I think that was something to do with the CMS or something.
Yeah. There's a bit of a. They said there was going to be a bit of a delay, but actually, in terms of the actual progress of the company, I think it was the first sort of not off note, but not negative note. It was just a bit off key because everything's so far been positive with Renalytix. I think it's a short pause as the company continues to build going forward.
So where do you see Renalytix going? When do you see it becoming profitable? And how quickly do you see it building those amazing revenues?
Well, I think the potential is unfortunately significant, not just in the US, but of course US certainly isn't the only Western country to suffer from obesity and poor diet. I think the UK were trying very hard to catch up, and I think the same can be said for some other European countries, and I think China as well. I don't think there's any plans for them to go into China just yet, but I would imagine that company would be in a very different shape 2 to 3 years from now. You should see some meaningful revenues. They certainly, James McCullough and his team certainly is not the type to throw money away. I'm certainly not saying when it would be profitable, but if it didn't have meaningful revenues in 2 to 3 years' time, I'd be surprised. Very surprised.
Wouldn't you think there'd also be profit at that time too?
They could do, but I think it's always one of those things that as long as they don't run out of cash, you could say, well, okay, it's a software company, it should be earning a very good gross margin, and if the algorithms are as good as they certainly appear to be, it should be able to command a good gross margin in the market. So do you invest in sales and marketing, or not a huge sales team, but certainly getting a team out there to go and sell it to academics or doctors? What is the optimum way of doing that? As long as you can say that 60 or 70 or 80% gross margin, if it does fall down into a loss every now and again, and it's a stated strategy to do that for 18 months, then very often we say, right, just go for it.
And you're not worried about its cash burn, because I think it gets through 40 million a year at the moment, and it's got about 80 on the balance sheet, hasn't it?
Yeah, well, certainly we'd be hoping to see some proof of revenues if they come around with the begging bowl again, but there hasn't been any talk about that for a while.
Brilliant, thank you very much. And moving on to one I'd like to ask you about is Luceco, because that's dropped down about 30% over the last few months. What are your views on that?
I think it's part of the malaise about people thinking manufacturing has it had a bit of a COVID pull through because of everyone buying plug sockets for their home office. I think there might well be a bit of that, but in terms of the company itself, I just think the brands that it owns in terms of the British Plug Company, it's got a 50% market share in the United Kingdom. I think their manufacturing excellence. They got this huge factory out in China, very low cost manufacturing, and very good at what they do. I think the demand for RMI and new build, that's not exactly going away, certainly not in the UK. And I think the company's reputation for delivering huge amounts, great pieces of kit is unsurpassed. So I've been taking advantage of that share price weakness.
And you're not bothered about margin squeeze because of increased costs or logistics issues?
No, I think they'll pass it on. There might well be logistics issues, but I think they'll pass those on.
Logistics issues they'll pass on?
Oh no, sorry. Well, they'll be paying more to ship stuff.
Yeah. Okay.
So there might well be, there might well be delays, which you quite rightly point out would be nonsensical to pass on. That's what Boris Johnson has done, isn't it? Pass it on. No, you're quite right to point out that's nonsensical. But I think if it's they will tell Wix, they'll tell B&Q, they will tell Electrical Direct, well, it's 3 weeks rather than 1 week, and everyone just has to sort of sit and shrug. But if it's sort of, you can have this piece of kit, but it's another 3-4% more, well, we'll take that.
And we all get it wrong occasionally, but hopefully we get it right more often than we get it wrong. But when you've got a position wrong, is that in your higher conviction positions? Do you ever get a position that you are completely convinced about and then it doesn't work out as you thought? And are there any common themes? Because I always think we learn more from our mistakes than we do necessarily our successes.
Boy, oh boy, you do, don't you? Yeah, there's nothing like a stinger when you get a curly one. No, I think there's less of those now than there were, and I think it's because everyone in this business tells you when to buy a stock. No one tells you when to sell it. And I think that everyone, sort of, when you're a broker, you're treated a bit of an outcast, bit of an anathema, sort of rather worse than a nasty smell if you say sell this. Yeah, but actually, that's what we're here. That's ultimately what we're here for. I'm here to buy in Lidl and sell in Harrods, and there's very often the ones that have gone wrong, and I'll come to an example of absolute beauty in a minute. Don't worry, it's an absolute stinker. I'll be quite happy to share it with you. That actually, when a share price does, well, let's say it's doubled. You say, they're good. Oh, aren't I clever? Or do you let it, and you say, right, quick, let it sell it, and then go on to something else? Or do you think, it's doubled. Do I ignore the siren voices of people say, oh, you're really good, and say, okay, has it gone ahead of where it should be? Or has it actually got something that it can grow onto in the next 3 to 5 years? So there's having a debate at the moment. There's a very recent addition to the market called Saietta, which is Italian for thunderbolt. And we backed that at IPO, and it's done very, very well since float. And it's doing quite well today, actually. Today, the 27th of September. But you're beginning to think, well, look at the market cap. How many motors does it need to sell to be able to support that market cap going forward? You can think, well, okay, that's you can believe in time it itself might not manufacture that many motors, but certainly it can sell licenses to people to manufacture those motors under license. Someone else take the capital risk. And then you think, well, okay, in Southeast Asia, there's a huge problem with pollution. A lot of people go around on putt-putts, mopeds. If you can turn just even say 20%, 25% of those motor vehicles or motorbikes from dirty diesel into electric, and that's what the governments in Southeast Asia are saying, that's what we're going for, because it's the best way to get rid of the pollution from. Then this company Saietta is going to it's not going to rule the earth, but it's going to do very well, very nicely. Thank you very much. So we can quite comfortable about that. Now we've been to, so it was not during one of the internal lockdowns. We could go and visit the management team. We saw the motor in action. I went on an electric motorbike. Went 60 miles an hour around a disused airfield in the Oxfordshire countryside. It was a lot of fun. Didn't tell my wife, but it was a lot of fun. And so you can sort of see where it's going. You can touch the technology, but it's sort of, sometimes you can see the technology and it's great. And there was a company long before the current management team came in and fixed the mess that the old management team made, in a company called NCC. And they were going into cybersecurity. They were in cybersecurity and consulting, and they were doing white hat hacking, where they employ, sort of young men who don't get out very much, but sort of like hacking stuff. So IBM or Sainsbury's would say, right, try and hack into our system, and they would pay a fee for, if the white hacker got in, big tick, but you don't go to prison. Okay, now tell me how to fix it. And they went on, not so much as an acquisition spree, but they bought some very interesting companies, interesting technology companies that had a great reputation for working with governments in cybersecurity. So real James Bond Q stuff, really quite exciting. And they had a great reputation. And I was debating with a colleague, and the share price was going up. And I said, oh, that's great, isn't it? And my colleague been doing it rather longer than me, saying, well, they're issuing quite a lot of paper in, and the numbers not really kind of adding up, are they? Sort of the H1 H2 splits and the debtors doesn't really stack up. I said, yeah, but the tech. So anyway, said colleague, so well, okay, numbers don't add up. The share price at the time was 330, and he put on a huge amount to sell, and that was the day before the profit warning came. So we had I felt about this small. My colleague had a sort of very, very long and loving chat with internal compliance. Showed him my colleague showed them the arithmetic he'd done and why he'd done what he did, and they just went, okay, well done, that's your job. So no problems there. And then the share price duly went into free fall. And the head trader said to me that I was just walking around in shock, or sort of punch drunk actually. And the share price was then about, I think lunchtime, it was £2.20. And I just said, just get out, just get us out, which he duly did. And then about a week later, there was another profit warning, and the chief executive was sacked. And then I think the share price went down to about £1.20. And then the finance director left. I think it's a long time ago now. Well, then they fixed it, and then we got back in. I just went, oh no, I just covered my hands. But my colleague went, doesn't matter, Ian. You've learned something, haven't you? It's just, oh God, I said, yeah, I have learned. And he said, right, watch this. Then he bought some shares, I think about £1.20, £1.30, and the share price took off. We haven't looked back, and the new management team have solved all the problems created by, shall we say, less than top drawer behaviour by the previous management team. So all okay now, but wow, what a lesson. So recycling capital, watch the numbers, and just think on.
And currently, do you think there's value in the markets, or are you worried by the recent strength and the wobbles that we sort of see from time to time?
Well, I think it's not so much overvalued or undervalued. I think it's much too like a mill pond in high summer. It is so benign. It's not necessarily flat, but such as the commentary and sort of the just the buzz or feel or gossip you get around the market. No one's actually sort of pricing in risk. Everyone thinks that it will continue going on up. I'm okay. We've had certainly some flutters around the market in the past week or so because of debate about bond yields and the emergence of inflation. People are beginning to realize that everything isn't quite the same as it was before we went into COVID. Certainly in the UK, we're finding out that the hard way this week. I think there's been quite a lot of debate, not all of it very well informed, about the nature of gas prices. I know we've had a good debate during this conversation today about energy security. I think there's going to be quite a lot of focus, and I think quite rightly, on the resilience or otherwise of supply chains coming into the United Kingdom. I think there's going to be a lot of lazy thinking, a lot of unclear thinking, a lot of people just blithely blaming it on Brexit, just like you blame burst riverbanks on climate change. I think there's certainly the inability or the resistance or inertia of people, not just in the commercial world. I can talk, I'm doing this from my home office, but in terms of there are some occupations which require people to be in a central place, also known as an office, so they can coordinate and actually get stuff done. And I think that not everybody is as lucky as I am to be able to do a job from home effectively 2 days a week. So I think there's going to be quite a few bumps and quite a few shocks that we've not been used to for quite some time. And also, we are, like it or not, we are the generation that wants it now. There's some heavy rain coming, so I ordered some waterproof trousers. It's going to be here tomorrow morning, but hey, what was wrong with waiting until the weekend like the old days? Everyone wants it now, or everybody wants it yesterday. So I think there's going to have to be quite a lot of understanding and patience from people, which has not always a quality that's in evidence.
So a crash or just volatility?
I think volatility would do, not so much, volatility doesn't do my remaining hair or my forehead any good, but certainly people should remember that markets can go down as well as up, and it shouldn't necessarily be a sedate and joyous journey to the sunlit uplands of making money without taking on risk.
Iain, thank you very much indeed. Tell people where they can find more about you and the funds.
Okay, the best place to go would be the Schroders website. I think believe there's a part of that which is specifically designed for retail investors. It'll give you all the information you require about the funds I run. I'm heavily involved in the Schroders UK Smaller Companies Fund, and I'm the sole manager on the Schroders UK Dynamic Smaller Companies Fund. And if you're interested in an IHT fund, then that too is available under the Cazenove wrapper. So that's got top class performance too, and that's publicly available. So you can, if you do your digging on the Schroders website, you'll find me.
Tremendous. Many thanks indeed, Iain.
Okay, it's a pleasure. Thank you.
And to all our listeners, please write reviews, like and comment our content on the different platforms. It means a lot to us and it helps us get the very best guests. Click subscribe at the top on the right hand side of piworld.co.uk to get a notification of a new video as it's published with no spam. Many thanks for listening and stay well.